want to do a quick microphone check before we get started. Make sure everyone can hear me okay, that the sound is coming through, and that you can see the first slide in our presentation. Awesome. Very good. Thank you very much. That's more than enough. Appreciate that very much. All right, we're going to get started here in about 10 seconds, so hang on, and we'll be right there. All right, hello everyone. I am Randy Lindsay. And joining me today is Gabriel Brent. Gabriel Brent is the author and the programmer for HawkeyeZones, and he's going to be giving you some basic concepts today on HawkeyeZones. The topic of today is simple concepts to significantly boost your profits. He'll be going through telling you exactly what zone theory is, what they represent, why they are important, and he's going to give you some very good examples of live trading that was done today that show significant profits. So Gabriel, take it away.
Thank you so much, Randy. I appreciate that kind introduction. And thank you, everybody, for joining me this evening and taking time out of your busy schedules to check out this amazing concept and tool. So what we're going to be talking about tonight is these simple concepts and how to give you context and why it's important, so that by the end of the webinar, we will be able to basically show you where you are in the context of the market, where to buy low and sell high. They always say that's so simple to do, you know, buy low, sell high. But if you don't know where you are in the market, then it really makes it quite challenging. We're also going to be looking at timing your trades and where to put your stops and targets based upon real supply and demand in your markets. So we hope to eliminate the uncertainty of defining trends and just to show you how traders are making and saving thousands of dollars by using this technology. But before we get into all that, let's explain a little bit more theory first. And before we get too deep into the theory, just realize that with trading, there is substantial risk of loss, and past results are not indicative of future profits. Okay, so when I first started out my trading career, I put all kinds of indicators and oscillators and whatchamadoodaws and lines and everything that I could possibly find out there on the net on my chart. And I don't know if anybody here has done that as well. And before I knew it, my chart pretty much lost price. Like, price was almost an afterthought, and I was like, you know, where are the price bars? And then I'd see price move real dramatically, and I'd be like, oh man, I missed it again, and shoot, how do I get onto this thing now? And I don't know if you guys have ever experienced that before, but that was just a terrible feeling, and it caused something inside of me to like just yell out, you know, like, what am I doing here? You know, like, why didn't I take action, you know? And I got all emotional about it. And it basically pretty much destroyed any type of statistical advantage I would give myself, because now I'm an emotional actor because I'm reacting to the market. So what we're tonight, not how to be active, how to be proactive in place. But to take off everything I had to start off with supply and demand. I thought that was a really good beginning spot. Really start the entrance. Bars don't make sense to me to do it. I began to look at highs or lows. Now one bar compares to another, and lo and behold, I found that there was a pattern behind this. I found supply and work. So what I'm going to share with you is how those basic be a market, man, just time, and what that actually looks like on target. Okay, so that's what we're using. Software does all this heavy lifting for us, and I think that was really, I figured out a really cool set of mathematical equations and functions and routines that systematically purple level, meaning guess what, ladies and gentlemen, we're going higher. Prices failed to do something. We've kept track of this market event in the past so that presently we can make a trading decision, and then in the future we can see where price is likely to react again in and on these basic principles of supply and demand. Okay, now how are these zones formed? Well, that's a really good question. They are formed by identifying consolidation, by identifying volume in our markets. All right, and when we know where consolidation, where accumulation is, then we can look to see where expansion should be. You know, it's kind of like with radar. Radar sends out a signal, and then whatever bounces back is where your object is in front of you. You know, so you don't necessarily have to see it, but you know where it is based upon that same type of principle. Okay, we're looking for the same type of things here. Okay, so for all you equation buffs out there, which I gotta raise my hand on that one too. What we're really looking at are the basic principles of support and resistance in time and supply and demand. Okay, we have an X and a Y axis on our charts, right? That's all we got. Your broker gives you market data over time. So let's use that to our advantage. Let's take what we get and use it to our advantage. Use it for our edge, okay? So this is how we add time to the equation. We've talked a little bit about these zones, and they could, on a smaller time frame, they could be support and resistance. And on the bigger time frames, they'll be supply and demand, okay? And this is how we incorporate time into that equation, okay? So that when we put it all together, we can know why the market is doing what it's doing, okay? And we can avoid buying into the highs of the day and selling into the lows. Instead, we're looking to take targets up here, and if we're selling down low, we're looking to take targets down there because we know where high and low is. We know where the context of the market is. And I'm actually going to share with you a few examples of that today because it was absolutely amazing today, okay? And I think it can be broken down into a very simple pattern that we can repeat day in and day out. Okay, so just to give you a case in point, here's a multiple time frame application, or a fractal, if you will. Notice that the brown zone, that means that it's been hit 4 times or more, and it's brown on all 4 of these charts. Now, this zone is actually 4 days old at this time, and for most price action traders that are using a bar-by-bar analysis, it looks like we just exceeded a double top over here. And guess what that means? That means it's time to jump onto the long bus, my friends. We're going long, but guess what? It's still inside the zone. The zone is still there. The supply from the 60-minute time frame, in this context of a day trading perspective, 60-minute would be our supply. Then we have a 15-minute, which is kind of a supply and demand support and resistance chart. And then we have the support, or in this case, the resistance zone up here, okay, which is our entry time frame of like the 5-minute. And we're using this fractal to limit the risk on this particular trade so that as we see price bouncing outside the level, we can get on board and take it in the direction of the trend, okay? So very simple ideas, very simple concepts, but if we don't know where these levels are, we can't really take advantage of them. So here's an example of gold. This level is 7 years old that we've been hitting, okay? I don't know if you guys are aware of this, but this zone is a 7-year-old weekly zone, a 7-year-old daily zone for support that we're hitting off of. And look how it just kisses price and amazingly shoots up. I just find that absolutely amazing. I'm still absolutely bewildered by how this stuff works. And so then price bounces up there, but we're still in a downtrend, you know, and that's okay. And now we're inside the weekly level, and look at this on our daily chart on the smaller time frame. We can see a purple level and the brown level, and price bouncing back and forth in between those two levels, and it gives us the top and the bottom of the range that it's going into. It is truly mind-boggling why this stuff is working the way that it does and how it works so well. So instead of support and resistance or supply and demand just being a line on your chart, we give you the area, and it automatically plots out for you. It is truly very, very interesting, okay? Now, as we're looking at our markets and as we're looking at the y-axis, I think it's also important to put in the x-axis, okay? Now, I don't know if you realize this or not, or have ever even contemplated the idea of us being creatures of habit. Okay, but how many people here eat breakfast at the same time of day, or maybe go to bed at the same time of day, go to work at the same time of day? We have this lunch routine, you know, just our daily routine that we do, and it gets so boring and yada, yada, yada. But either consciously or subconsciously, we can see this pattern working out in our markets, and it's absolutely amazing. Now, what the Hawkeye Time tool allows us to do is it allows us to time our trades, okay? And I will show you how this works to the fullest extent here today. But this is absolutely amazing, and I recommend that you use this tool on a 5-minute chart or less, okay? So what we're identifying are the tops and the bottoms of the hour, as well as the first 15 minutes, so that when we put everything together, we get this beautiful symphony of zone action and price action, confirming the zones as it does the nice money bounce where it turns the aqua zone to a blue color. We get a nice money bounce there, and as the trend continues on, and you can just see how price is bouncing off of these zones at these times of day. It is remarkable, okay? And I'm not going to just show you the slide and say, look how cool it was on this day, but look how cool it was today in the markets. All right, I want to show you real-world examples of how these zones work, and how we can use not only using the zones for an entry point with a money bounce, but how we can use the zones as targets. How we can take our first target at the first zone of SR that comes into place. How to play our context chart and our third target, where to be putting that, and how to use supply and demand to manage all of this so that we're dynamically setting our targets and our stops to where the reaction points will be in our markets, okay? So that when we look at it from a before and after picture, we're using these zones to enter the trade, okay? And then we're using them to take our targets, one tick outside the zone, one tick outside the zone. And we're actually seeing the flip-flop of price and how supply and demand have changed over time based upon like this yellow zone becoming this purple zone over here. Did it reform? Absolutely. Is it bigger now? Yeah, it is. I can't control how big these zones are because the market tells me how big they are. All right. Now here are some examples of zone traders taking trades today, and this is on the ES. All right. Now you can see he entered here first, and he actually uses the target of this zone here, and this is actually range bars that he's using on this particular market, which is, like I said before, the ES market. So he uses the zone as a target, and it looks like he's trying to join the trend to the downside. Doesn't work, but he gets a good target because he realizes what's going on, and it gives the money bounce out of that zone. He tries it again. It doesn't work, but he gets out, and he uses the money bounce to take it up long. And in this one, it actually looks like he adds into the position so that he's taking a target up here as price is bouncing, and he completely closes the position as price is bounced off the zone and potentially off the range in that direction. Okay, again, he takes a short into the zone and taking a target one tick before the zone. All right, so that's how we do this, and we keep it nice and simple. Define the trend and use the money bounce in the direction of trend. Here's a trade on crude oil. If you look at the Y value, that is how many ticks we're actually getting. So 10 ticks on a T1 and on a T2, 60 ticks there. That's over an $800 trade right there, just with 2 contracts. You know, personally, I use multiple contracts, but everybody has their own style. And then this is my trade, is thinking the exact same way. Using the money bounce at the first 15 minutes when both the time zones and the price zones indicated that, hey, our trend is up, this is a good pullback, getting long into that and taking a nice T1, T2, and a T3, and then got stopped out just below this pivot as it retraced. But I understood why I was getting, or I was retesting the supply up here, because I can see this from my trend chart, okay? Just so that you can understand, hey, this is low, this is high, we're bouncing back and forth. There is no surprise here because these levels were drawn way before in the past from high volume nodes, from that consolidation of price action, and we've been keeping track of it so that today, as price action was interacting with these levels, we completely understood what was going on and how to get on board. So it's simplified trading. After the first, hour of the markets, I was done trading, just because it was a nice little trend follow trade to the upside. And you know what? It came back down again, but that's okay. It was the trend follow trade in a very simple way. Okay, so with that being said, let's get into some real live examples of what's going on, all right, in the markets today and how we can actually use the software to help you, okay? So first off, I'm going to start over here with the MetaTrader platform. We support the NinjaTrader, TradeStation, and MetaTrader platforms. You can see from a big hourly chart, 30-minute charts, and a 1-minute chart what is going on here. All right, and what I would like to share with you guys is some basic zone principles. I want to give you some golden nuggets to walk away with here tonight, all right, so that you can see the big picture just like the big boys, just like the institutions, okay? We want to make it obvious as to not only how the institutions do this stuff, but how mass psychology will come in and affirm these movements, because we can understand what's going on at these different levels, okay? So let's get into some analysis here, all right? So we're in a downtrend on this big hourly chart, okay? And with the software, we can actually just show however many zones that we want to see on this chart, okay? So if we're in a downtrend, we can see 2 zones above and 2 zones below, okay? And we're hitting some resistance. Actually, this would be supply in this case because this is our longer term time frame. So we're hitting some supply and it looks like we're getting a little bit of a reaction here, okay? So that on our smaller time frame, we can come in here and find an entry point. We can find out where all of these zones coincide with one another, where the purple zone coincides with this level, which coincides with our smaller time frame, okay? So that all of that stuff is made apparent for us, okay? So we can see the reactions of price and how it moves throughout time. So that's really what we're looking for here, all right? Now, I'm going to share with you something that I think is really, really cool. I call it the flip-flop trade. Remember how we talk about supply and demand shifting over time, what that means to us? So I'm going to not really talk about context so much, but more about the software. All right. Now, what we are doing here is we're showing the zones that were on our charts at these particular days, okay, or at this particular time. All right. So you can see the zones that were there as they were there, because as price moves throughout the zone, or if price moves above the zone, it will take the zone off the charts. Okay, and we call it a dead zone or an active zone, all right? But something that's really, really cool and I found really, really helpful is, let's say that the trend is up and we see some resistance levels on this small 1 minute time frame getting taken out, and as price goes through those levels, we're now going to be looking for basically a flip-flop of price action. So we're going to be looking for price that was, or we're going to be looking for the zone that was once resistance become support. Okay, so price takes out these couple levels, comes back, jumps into a nice little support zone down here, and we are seeing the rally take place right now. Okay, so just that simple little idea is what we're trying to take advantage of, you know, and seeing the flip-flop. And when we show these dead zones, we're looking for support or resistance to become support and flip-flop back and forth, because that's the way the markets move. It's nothing magical. It's nothing mysterious. There's a logic behind it. And when you can understand why the markets move, what's moving the market, then you have a really good edge on the right side of our chart. And let's face it, that's where we want to be. So that's how the zones work in real time, and you can see this here on the forex market here. And with that being said, I'm going to actually let my friend Randy here show you some more examples of the zones and how they're working on other platforms. Randy, are you there?
I am. Absolutely. Thank you very much for that, Gabriel. Appreciate that. Very good information that you shared there. I've got the NinjaTrader platform here showing the Hawkeye zones. I've got a 15-minute chart of crude oil. You can see the information that he shared this morning is exactly accurate to what we were doing off of that. But this is a time chart rather than a range or a tick chart. But you can see clearly where support or the demand zone was when price came right back down extension to and touched the area and then immediately ricocheted off. Coming up into the open of the market this morning, you were looking for a trend up. So intraday trading off of these, if you're looking at trading the shorter time frames, like a 3-minute chart, then looking at a 3-minute chart back to the open of the market. Where's it right? There. Then you would always be looking in an upward or long direction. Now this is a little bit smaller. These zones have already been cleared for the day, but at the exact time of the trade, then the zones would be cleared and visible to you during that trade. Other trades that we're looking for. Gold was a very dynamic trader today. If anybody are trading gold markets, then gold has had a pretty sound run up. From yesterday's close, rallied down into support, right down here into a demand zone. Then we saw it come quickly bounce back out, stabilize, double test, and off to the races. So by the time the markets opened this morning, then we had a really nice rally, bolstering that up into the mornings of the trade. I've got some examples to show on TradeStation as well. I've got some stock setups here. Let me go ahead and show you some examples here of just the zones. Here we're looking at Smith & Wesson. If you're a gun owner today, then looks like a lot of people are going out and trading in those stocks. So Smith & Wesson had a dynamic open today. Looking at the zones and how the stock traded, you can see overhead resistance, price traded down into the lunchtime area with some support just under 21, and then you could see once that support started, then you could see many zones followed directly after that until it reached, boom, overhead resistance yet again. And so it's very easy to see, and if you look at the longer time frames, you can see that this right here is a confluence zone where longer time frames are all in the exact same area, and so those zones are strong. And we like to be able to see when price hits all three time zones at the same time, then that gives us a confirmation that there's a high probability of price stalling or reversing at those locations. Okay, other examples, you can pull up any other prices or charts that you are looking for. This is the some different stocks. Obviously, it would work in any other market. And Gabriel was showing you a lot of the forex markets. I'm showing you here the stock markets, the equities, and the Ninja. We were showing you the futures markets as well. So with that in mind, I'll be able to go into more details and show you more complete setups of the charts later on in our question and answer. But right now, I'd like to transition over into our offer that we have for you today. Then I want to go through and present that to you for that today. So today, what we're going to offer for you is the software package itself, HawkeyeZones and HawkeyeZones Time. Gabriel did an excellent job presenting that to you. So we're offering you a very special today during today's webinar. In addition to the software, your purchase will include access to the Hawkeye Traders membership site. With that, you'll get user documentation, training video library. You'll have full access to download and install your Hawkeye software. You'll get free product updates for the life. You'll also get free customer support. And in addition to all of this, you will also get a free bonus 2-hour live training webinar with Nigel Hawks himself on February the 17th at 12 noon. This is where Nigel will be going through and training you on the HawkeyeZones purchase. The platforms that's supported on, again, is NinjaTrader, TradeStation, and MetaTrader 4. So what is the offer for the zones? It is $697. Normally retail, if you were to go to the store and buy today, it's $1,000. But today, during our webinar only, $697. The link for this, HawkeyeTraders.com/target. HawkeyeTraders.com/target. Let me type that into the chat window for you. So you can click on it. There it is. So over in the chat window, you can click on that link, and then you'll be able to link that in and go to that. If you are having problems with the order, then you can call in 859-963-3445 to place your order by the phone or get a little bit of assistance with your order today. Again, that includes the HawkeyeZones, HawkeyeZones Time. It works on NinjaTrader, TradeStation, or MetaTrader 4. For those of you who are using the Thinkorswim or TD Ameritrade platform, it does not work directly in Thinkorswim, but you have a free option by using the free NinjaTrader platform and linking your Thinkorswim or TD Ameritrade account through NinjaTrader, and that way you'll get free stock and ETF data and use your zones on the NinjaTrader platform. So that way, those of you who are using Thinkorswim have a hook in to use the zones via the free NinjaTrader platform. Okay. So with that in mind, we'll leave that up again. Again, the link is HawkeyeTraders.com/target. And that'll get you right to the buy page where you can click on and purchase your zones today. Today is the second and final presentation for this week of the zones, so make sure that you get your copy today, because after today the price is going to go right back up to its normal price. NinjaTrader platform is free for download and for use, and if you use your TD Ameritrade data, then you have a free data source into NinjaTrader. If you want to trade with NinjaTrader, then the NinjaTrader platform will cost. There's I think a small $997 fee, I think, to buy a license to use Ninja. That's for a single broker. Other than that, it's free. Just like MetaTrader 4 is a free platform as well. The software is available if you have a laptop and a desktop computer, you can load the software and run it on both your laptop and your desktop, or if you have a home computer and a work computer, then we allow you to do that as well. If you want to run on multiple platforms, if you want to run it on NinjaTrader, you want to run it on TradeStation, you want to run it on MetaTrader 4, then you will have to buy a subsequent license, but you get the subsequent license at 50% discount. So in other words, you'll get half off if you buy a second license. But you'll need to contact Hawkeye Traders support in order to get the multiple license discount. Yes, you can, Kim. If you order it from NinjaTrader, you load it onto your NinjaTrader software. It'll run native on NinjaTrader. That's exactly right. And you can run it on up to 2 machine IDs. So if you have a laptop or a desktop, you can run on any of those. To see the presentation again, it has been video recorded and it will be made available to you via email. The link to the replay of the session will be done later on this week. So you'll look for your email and you'll be able to get that. So if you came late, you'll be able to see the rest of the presentation then. Eileen, yes, if you want to go ahead and purchase today and later on, whenever you get CR charts up and running, then absolutely. Make sure that you let them know when you purchase, so they'll put that in your notes on your account that you're requesting to do a multiple purchase. But anytime, if you've already purchased it, anytime that you purchase it afterwards, you will get a 50% discount regardless of what platform it is. No, the zones are not derived from volume profile at all. The zones are very heavily based upon price action, but it incorporates the volume as well. Yes, today's presentation of the zones have been completed. We're going to go into the detailed question and answer sessions right now to make sure that you get that. We just want to give everyone ample time to see the presentation offer and to have the link available for you to do that. Kim asks how different are the Hawkeye zones compared to other zones in the market. It's hard to say. I'm not sure if they automatically update based upon price interaction or not. I don't know how they form, but I know that how ours do and on how ours work with our charts. We are very, very happy and pleased with our results and trading with these zones because it interfaces and integrates with our software very nicely. And so they're very simple to use as well. They automatically draw and automatically update. Laura wants me to show ES again. Okay, I'll be glad to do that. What time frame would you like to look at, Laura? Three minute, okay. All right, here's a 3-minute chart of the S&P 500. Right here from noon, you can see that we were in support and we were range bound basically the whole day. A couple of wide zone pulling in. You can see from the opening of the market this morning, price comes up, test, stabilizes, and then branches off. And so you can see the opening expansion of price came right back down into the daily range and then contracted. You can see it's starting to wind back up and coming up into this area. So as it got into the close of the day, dying back out into a central range. So this is going to be the launch point for tomorrow. So you can watch for these zones to continue through into tomorrow's trading or even into the Globex overnight trading for that. But that kind of set the stage for that. So these were new zones that were formed. Retest gave us a beautiful, beautiful money bounce off of the day trading. So if you were watching this, then it was very easy to see the double top was a simple money bounce trade that gave us a beautiful setup for the downward move that gave us a considerable amount of profits into our target, which was already established from earlier this morning. Nope, there are no pre-drives of the software before purchase. Sorry about that. What is the success rate? Well, the success really depends upon the trader. You know, trading is probably 90% psychology, 10% the trader, the skill, the technical analysis. So, you know, trading success rates vary from trader to trader. You can give a trader a perfect system and they will still figure out some way to mess it up. But that's just reality. Can I show the Russell on a 5-minute chart? Absolutely. 5-minute chart. There we go. Here's today's Russell on a 5-minute. There is the support from in there. Looks like pretty much the same story that we had gotten from the S&P as well. There was a previous zone here, yes. Let me turn the dead zones on to show you prior zones. That's right, see there was a prior zone right there where price came up, tested, just broke one tick, and then broke back down again, okay? Absolutely. On the launch, here was the money bounce right there. That was the get-in trade. The market opened, went right to the zone, and then took right off again. How often does price blow through zones? It does it quite often. As you could see there, prior resistance becomes current support. So you can easily see how these occur. Gabriel, I think you had showed that before, how flip-flop trades occur and how the zones flip back and forth between supply and demand. And it's very easy to see that on charts that show these really strong moves, because whenever you start to see multiple supply or multiple demand zones forming in one direction, then that gives you a clear indication of a strong trend. And
yeah,
then,
so we really want to be mindful of time frame and trend when answering that question and when looking at the response to that question, because from a smaller perspective or from a smaller time frame, these levels are support and resistance levels. Okay, so if we get one bounce on a support and resistance zone, that's great, you know, especially when it's with trend. Now, as you're looking at the bigger time frames, the zones are going to hold stronger with the bigger time frames than they are with the smaller time frames, because it's more supply and demand in nature. Okay, so from a small time frame, we want to say, hey, if it gets a response, if price responds to a zone, let's say that the trend is up and price responds to a zone of supply, that's great, because we've identified a turning point. You know, we've identified possibly a flip-flop area where price is going to do something because we know the trend is up. And so don't be surprised for a little bit of reaction there. But how big is that reaction going to be? Nobody knows. We just know where the trend is, and we know that we have a reaction point there. So we want to buy low and sell high if we're in an uptrend, right? So resistance is coming in here, and we can see how the market's stair-stepping up and down, And again, all we're looking for off of a zone is just a quick little money bounce, okay? And that money bounce doesn't necessarily have to be very big. It could be just one bar, one green bar responding to a support zone, one red bar responding to a demand zone, you know? So it could be really, really quick, but the trend is your friend. So we need to identify trend from a bigger time frame before we can truly answer that question. So it's a little bit more complicated than a 30-second response. You know.
Mm-hmm, mm-hmm. Thank you, Gabriel. I appreciate that.
Yeah.
All right. Someone wanted to see gold again, so let me pull gold back up. And what time frame did you want to see on gold? Where was that? I missed out on that. Gold, gold, gold. Who wanted gold? And what was that time frame? 15-minute? All right. There's your 15-minute gold right there. That's just beautiful. Hourly? Okay. All right, there's your hourly. Of course, I can compact this into a much smaller time frame. I'm going to pull in more data. Absolutely. All right. And what was the other pick? Someone wanted me to pull something else up as well. The euro, that was it. Okay, the 6E. Here's the today's euro contract. Now I can pull that out. It looks like I probably need to add more data, or the euro is on a much longer term high. So if you go to the longer time frame chart, oh, sorry about that, can't get that on daily. Let me go to the 60-minute, pull in more data here. Okay, it looks like we're at the end of the market. It looks like they're updating the data on the server, so it looks like I'm not going to be getting that data here on Ninja. Let me transition over to TradeStation, and I'll pull that chart up for you there. So we were looking for longer term, so let's go longer term on the EC. There it is. There's the euro contract. Let me put your zones on. There we go. So you can see the basis for the trade here for the past 1, 2, 3, 4 days. We have been firmly grounded into a congestion zone, and we have broken out, and with a target of a 1340. 1.1340 is the longer term target. So if you look at a shorter time frame chart intraday on this thing, then let's pull that up. And you can see on an intraday time frame how you can set that up and trade. And you're looking for longs on the market as it's going up, because previous trend, longer term trend guides you into that. So from those longer term trends, you look for these opening trend settings, and then you trade based upon those overall zones. So once it's set up, then you take your intraday trades if you're trading those. So it's a great, great tool to allow you to visualize supply and demand, longer term price targets to help you on your intraday trading, and then you use a longer time frame on an intraday chart to help you to see longer time frames for the shorter term. They do not repaint. The only time that any of these will repaint is if the underlying data has any data corrections or any fundamental data that changes, but other than that, they are rock solid. Who posts the zones level updates? No one. They're automatic. They will automatically draw on your charts every single day. So it will automatically, you'll have access to it every single day automatically. Sometimes the zones are on top of each other. Yeah, in a congested market, then you will see, like right here, you can see some of these zones overlapping, but only demand and supply will overlap. You can see this is a demand zone, and the supply zone is here, so you can see that supply and demand are starting to overlap. That only occurs on extremely low volume or congested price areas. You won't see that on supply zones or demand zones will not overlap themselves. They can be very close. The color codes, yeah, you can see based on the chart itself, if you format the analysis technique, you pull up the zones, you can see that the colors correspond to each one of the zone colors. So the supply zone is a red, the demand zone is green, and so those are the color codes for the labels on the side. So anything with a border or a label that is green is a demand, and everything that's red right here is a supply. Okay. Then any brand new zone is an aqua or cyan color, so that's this color right here. First bounce is a blue color, so anytime you see a blue zone, that means that price has interacted with that zone one time. So price is formed here, it's an aqua color, price comes out, comes right back, it's touching, that is a bounce that it refers to as a bounce one color that causes that zone to change from this color to this color automatically. Okay, bounce color 2, orange, so you can see this color has been interacted with price twice. So price has hit that zone 2 times, it's colored orange. Purple, 3, so this one has been 3 times, okay? 1, 2, 3. And so it's purple, and so forth. Okay. If it's brown, it's been there for a long time. It's been hit 4 or more times by price. And you know, like the analogy of a felling tree, if you chop the tree enough, it eventually will fall. So just like zones, if it's hit over and over, eventually over time it will fail, and it could go away. So I want to give you those colors there. Crude oil on 5 minutes, one more time. Okay, I'll pull up here on this 3 minute. Let me pull over here, if I can pull this back up again. Yeah, come on, there we go. Five-minute crude oil. There's that same overlap. Once the market closes, then you can see that the data overlaps and it gets very congested. So that's very, very common. It's not ready for NinjaTrader 8 yet. It's right now it's only functional in NinjaTrader 7. Do we supply a trading system to utilize the zones? The zones are installed in the trading platform itself. So I'm demonstrating for you right now the NinjaTrader platform. It's a platform that supplies data and gives you access to the trading floor so you can process your trades or use it as a simulated account to practice your trading. TradeStation, which is another platform, or MetaTrader 4, any of those platforms will support the Hawkeye zones, but we do not supply those. You will have to have those platforms already installed and ready to go.
I just wanted to take a quick minute and talk a little bit about trend with the software and how easy it is to define trend. And I think this 5-minute chart actually does a pretty good job of defining some concepts here for us. Okay, so what we're basically looking at here, and you can see 3 zones on the top side of price, right? 3 resistance zones. Okay. Now, not knowing anything else, not looking at any other charts whatsoever, what is really interesting to me over the years has been how these zones can plot 3 new zones in a trend direction. And then this can be on your entry time frame as well. But when you see 3 zones plot in a direction, you'll usually get a beautiful money bounce off of that level and a nice little trade there. Okay, and that's just a very, very simple way of defining trend. And if you missed it from the bigger time frame, or maybe you're thinking in another context, just look for 3 new zones to form on a particular side, and that's where the in-term trend is for sure.
Thank you, Gabriel. Appreciate that. Gabriel, could you go back over a money bounce again, please?
Sure. The money bounce idea is basically price retesting the zone. So we can see the price like formed a level, and then as soon as it does a quick bounce onto that level, that is the money bounce. Okay. So it can happen really, really quickly. You know, it can take like no time whatsoever. And so that is the, basically it moves from aqua to blue, and as soon as it triggers, then that's the money bounce. So that is all that it takes. It can be very, very quick.
Thank you. Thank you very much. Thank you. Thank you very much.
So it looks like somebody was looking for Facebook. Do we have Facebook over there on our TradeStation version?
Facebook? What do you mean?
Looking to see the Facebook stock?
Oh. Yeah, I thought you meant, are we on Facebook? That's funny. Yep.
Yeah, I don't know if we're on Facebook or not, but you never know with technology.
Yeah. All right, there's Facebook. Looks like we've got, was that new highs? Wow.
Mm-hmm.
Incredible. Yep, so we're up in the ether up there right now. So all the zones that we've got right currently are, unless I only have it defined just to show the last 2 zones. Let me see that. Where the Hawkeye zone right there.
Nope, you have them all showed.
Okay.
The only other thing would be basically the how much data you have loaded on that chart.
Oh, that's right. That's exactly right. I don't have that loaded. Let me pull it over here.
Because if you don't have enough data, then we can't do our data mining stuff.
You're right. Yeah, you can see even on the weekly, there's nothing up there. We are at all-time highs, and so looks like we're kind of out there, even with that. I do have this has a lot more data in it, so we can see where prior support and the demand zones were, but now we're up into the...
Something also that I think is very cool, open up that chart again if you don't mind. The daily chart? Yeah. So you see the aqua zone that was down there and how a blue zone forms just above it? That's usually big institutions protecting their interests. When you see zone on top of zone, that's usually a good sign that there's a lot of support or resistance coming in at that particular level. So the money bounce on that zone that forms just above the aqua level, yeah, that's a good money bounce. And you can really see like that thing like it did not take off. It
it launched. It launched. Yep. Absolutely. So how does this differ from the Ichimoku cloud? It's nothing like the cloud. The cloud is based upon other moving averages, and is very much delayed, but this has nothing to do with, it doesn't even function anything like Ichimoku Cloud.
We're using historical price action that could be years old in some applications, and we're projecting it on the right side of your chart. So we're looking to define supply and demand, support and resistance in real time for you on your charts, okay? And by using basic principles like the money bounce in the direction of trend, we're able to jump on board, and it's absolutely amazing.
Cool. Does it work on TradeStation 9.5? No, not yet. It only works on TradeStation 9.1 right now. There are some still bugs in 9.5. 9.5 still isn't a full release version yet. They are still grappling with and getting some bugs worked out of it. So 9.1 is the only full release version. 9.5 is only a release candidate and has not been fully debugged yet. So there are still some problems with it. So stick with 9.1 if you can. No, has nothing to do with voodoo or anything like that.
Well, these zones plot when they plot, and they're on your chart, and price interacts with them when it interacts with them. We're not cherry picking, so to speak. It really is reacting to price. You know, like it really reacted to that purple level down there. You know. Mm-hmm. And again, we're just looking for one money bounce off of a zone going with the trend direction. Mm-hmm. So we're looking at this flip-flop of supply and demand. We're plotting these levels so that you guys can see what the big institutions see, and like how you can use historical price action, which is very, very conniving if you think about it. They're using history, which is probably outside of your frame of reference, to really drive what's going on in the markets, you know, and like it's pretty low-handed if you ask me, but it really works quite nicely, just because you can keep on doing the same thing over and over again, and people will see it as a random mess, but there's a lot of structure behind this. And that's what we're trying to make visible to you, so that we have an automated tool that saves you time and money by plotting all these levels that may be hidden to you otherwise, okay? Because you're not looking for the 7-year-old zone like what we talked about with our gold example, you know? Mm-hmm. You're just not even looking there, you know? So it's absolutely amazing. And very, very cool. And like all those different live trades that was shown from the zone traders today, like they're just using really cool stuff. Okay, so
cool. Does the software package include tick and volume count indicators? No, the package only includes the Hawkeye Zones itself. So if you're looking for what includes only the zones and the zones time indicators. The other indicators I've shown on the charts were just part of my trading system, but those are all part of the Hawkeye system, but not part of what we're offering for you today. What's offered today are the Hawkeye Zone and the Zone Time software only. Yes, this has been recorded, and you will receive an email following the presentation and to get a recording of this video today. No, the software does not scan the markets for you. You'll need to have some other software like Market Analyzer. NinjaTrader has a Market Analyzer tool that allows you to scan through and find software that meets your criteria. TradeStation has a radar screen that allows you to go through, scan the markets, and find the trading opportunities. But the zones themselves are not a scanner, so they don't actually go through and scan for you. No, James, it does not work directly on Thinkorswim. However, we have a fix or a link that you can use your Thinkorswim data in NinjaTrader, and simply by connecting your NinjaTrader or your Thinkorswim account to your free NinjaTrader platform, you can do your technical analysis on NinjaTrader but still continue to trade on your TOS account. Okay. Amazon, you want to see Amazon. Okay, I'll show you Amazon. Oh, that's a beautiful mini bounce right there. Look at that. Let me pull up over here. I am. Daily, weekly. Okay, here's a support. It looks like we're going to 508 as your overall support that you're headed for. Okay. So a typical trade example could be like this. Many times if you see a brand new aqua zone like you see here formed, a lot of traders will take and they'll put, let me put this here on out of snap mode, they will put a trade order in to enter the market anywhere inside this zone. A lot of times it's usually right about the 50% point. Other people can put it right down at the bottom. So if price comes right back up into that zone, that limit order will be hit and they will be short the market based upon price coming through this. And their stops then would be located just outside of that zone right there. So that would be a typical entry scenario for a retest of a zone that has been formed in a downtrend. So you're looking at taking a trade in the direction of the overall trend, but with the retest, you'd be taking that as a short and not as a long. Okay. And then the target would be the next target of opposite type, which would be, since this is a supply, we would be looking for demand as this is the target.
Okay, I just want to answer a quick question about zones overlapping. If you see support and resistance zones overlapping each other, what that means is you're in really tight consolidation and you probably don't want to be trading there. Okay? So that's what that means if you see zones overlapping.
Yeah, we had shown an example of that earlier on crude oil. At the end of the day here, we had several overlapping zones there.
But yeah, it's just realize that it's probably not worth your while to be trading if you see that on that particular instrument, and go to the next one. So
yep, there it is right there. So colors, how did that aqua zone turn into a blue zone? So if you were to go to the indicators, then it shows you the color codes right here. Right. So if you're identifying that, then you can see that the color for a new zone is aqua. It becomes a blue zone whenever price interacts with that one time, and it automatically will detect whether price is in the zone or not, and it will automatically change the color to blue. So
and it does take a few bars for a zone to change color because we want to make sure that the zone is being respected by price. Okay? And again, it goes back to time frames. The bigger time frames are going to hold price more, like supply and demand hold price more. But the smaller time frames, we want to make sure that it's acting as support and resistance, and if it does act as really good support and resistance and gets like a crazy bounce off of that level in the direction of the trend, like it'll definitely turn blue and it'll stay on your chart for however long that data is on your chart. The software is highly data dependent. Okay, it is a data mining tool. We are using historical price action to predict future price action. Okay, so when we're looking at the bounces off these levels, we're going to record that bounce however that happened, how that collision detection works. Okay, but it does take a few bars for it to detect it. Sometimes the zones, when they're identifying areas of consolidation or accumulation, or high volume node areas, so to speak, it does take a few bars for us to read the price action of the market. This indicator is dynamic to your markets, okay? We don't get to define the zone width at all, so it is dynamically defined by the money managers and by the market that we're watching. So they're the ones that that are defining how big these levels are. The market really defines how big the levels are. It defines how big the support and resistance, how big the supply and demand, when these levels flip-flop, okay? So that's what the software does, okay? Now, as we're talking about like in the presentation, it's really good to use higher time frame confluence. And can you please remove the CL chart, because that just messes me up.
What do you mean to show?
Just let's show the bigger time frames there off of the TradeStation one. We can see a multiple time frame deal.
That one? Daily, weekly,
Yeah,
monthly? Okay.
That works. Okay. So when looking at this stuff, what we want to be doing is we want to be using those higher time frames to say, hey, I'm looking to get in at resistance or at supply up there at 640, let's just say, okay? And so then we'll be using the smaller time frame to jump into it. Let's say like if we're swing trading this thing, then maybe we use a 4-hour chart or a 60-minute chart to jump in. Now, I am making a big assumption here that most people know what support and resistance and supply and demand is, and I'm sorry if that's kind of a big assumption, but so many traders don't understand how simplistic these concepts and how powerful these concepts can really be. And all we're using is basically a confluence of zones all at one area where the bigger time frame zone is. We look to see if trend is aligning with that level, and then we can use the smaller time frame in a fractal way, okay? And all a fractal is a pattern repeating itself over and over and over again, okay? So we're just using that fractal pattern as an edge. Instead of reacting to the market, being like, oh man, the market moved down so quickly from there. Why did it do that? I knew I should have done something. We're now predicting where price is going to turn. Where are the major pullbacks going to be? And when it comes down to it, it's a very, very simple ideology. We're buying and selling pullbacks in the direction of trend. That is all. So I hope that that makes sense, but I felt like it needed a little bit more explanation. So I hope that helps.
Thank you. Jeanette, I don't know if you can hear me or not, but there's someone here named Ben who needs some support. And if you can contact and get support to give him access to his software, that would be great. I would appreciate that. He gave his email address and the information that's there, so we need to get someone from support on to him as soon as possible. Thank you. Okay, read some of these questions. How do you determine trend? You can with the zones, you can determine trend by looking for the number of zones that are present. Like Gabriel had gone over before, whenever you see a series of either supply zones or a series of demand zones, then that is a very well established trend. With the Hawkeye software, we use trend lines. So you can see that these lines right here, these dots change color. So in a downtrend, they are red, and when price is strong enough to push it beyond the Hawkeye stop, the automatic trailing stop, then the trend dots change and cause it to go in the opposite. So that's how we determine trend at Hawkeye, and it's all a purely volume-based trading method, which looks at volume and price over multiple time frames in order to confirm entry over time. These zones are a fundamental tool that help us to see longer-term target or supply and demand zone regions relative to our trend software. So they integrate and work very, very well together. And that's why we are using them today.
Okay, I had a quick question about the zones are different on each time frame. No, they're a fractal. They form fractal pattern based on price action and volume. Okay, so they may change size a little bit. Okay, but they are going to be highly related. All right, to one another from time frame to time frame. Maybe you've seen other zone software out there that is not, okay, and that's very common because, well, it's easy not to have it that way, okay? But this is a fractal pattern, and the fractal pattern not only works, it's been absolutely amazing. This fractal pattern not only works on the small time frames, but it also works on larger time frames. Could you turn over to like the ES or something like that for me on NinjaTrader? So basically that's what we're looking for, you know, like let me come over here real quick, and I'm actually going to take control.
Thank you.
And I'll show you guys a fractal time frame, okay? All right, so as we're looking at this thing, okay, we're going to be looking for a fractal time frame from a bigger chart, okay, over here to our secondary time frame, and we're going to be looking for this stuff to line up all together, okay? So you're going to see zones that are inside of zones, okay, as we're defining stuff. All right, so at the bottom of this big weekly zone we see a daily zone, okay, and then we can come over here and see another zone inside of that. All right, so that's the way this stuff works. It's fractal in nature, and you know, we can do it on swing trades or day trades, however that works. So let me come back here to this this slide here, and just share with you guys. You know, this is the offer that we have here today, and I really recommend for the training to really look at that video training section, as well as the up-and-coming webinar with Nigel, okay? So those would be two great training areas, and we are updating the training library as we see fit to help out with these basic ideas and concepts, so that we can get you the software so that it can give you good analysis and save you time by giving you a good analysis to how to bring context to your trading using very advanced fractal patterns, okay? So can you determine trend on your entry time frame? We would be looking for 3 zones to form together, okay? So like 3 supply zones, as Randy was talking about, or 3, excuse me, resistance zones if you're on your entry time frame. That is always a good sign of trend, okay? So that's pretty much what we're looking at there, and that's what we're going to be looking for. So let me see if I can show you a quick example of that. All right. All right. So basically what we're looking at here is, you see the zone bounce up there, and then as price is rolling down, and let's see if this works here. Then as price is rolling down, you get a bounce zone, excuse me, a zone bounce, and then continually, like, we're starting to make zones. So there's 1 zone, there's 2 zones, there's 3. At that point, that's when we can start defining this as to the downside, and you can see how far it's actually slid. All right, So that's the ideas of what we're doing with this software. So I hope that makes sense there. Smallest time frame for day trading. That's really a personal choice. I know several forex people. Everybody on MT4, like obviously the smallest one you can use is 1 minute. But from the zone traders that I've seen over the years, we're using a combination of range, tick, and like small minute charts. So I hope that answers your question there. And Nigel will be doing a training presentation here on February 17th. So
He's currently in France.
There you go.
Yeah. So where is he? He's in France on vacation. Someone wanted me to pull up the Euro US dollar. I'll be glad to if you give me a time frame. I'll be glad to pop it up for you. Or Gabriel can pop it up on his.
I'll let you go ahead and do that, my friend.
$5-minute. Okay, I'll do that. Let's see here. I think I've got one with the tools up here. We'll look at a 5-minute. Here's one right here. It's 15-minute. I'll put that down to a 5-minute. And then let me turn my zones on. Put that down here and then blow it up a little bit for you, make it a little easier to see. Okay, I'll just blow it up. All right, so what do you want to see on this? Looking at today's analysis for that, you can see the opening of the UK London session. Came right here. All right, very strong trend up today. The zone showed these support levels, 1, 2, and 3. When you see price extension like you see right there, when the price bar comes right back down into the zone and you see the volume color change like we see here, those are very, very key reversal indications that you want to be all over when they come up. Okay, so if you're looking at this point, you're looking for that trend to reverse and you're looking for trade entries to go in the opposite direction. Okay, and you get that indication. How long was that? That was at 11 o'clock Eastern Time U.S. and the actual uptrend occurred right at about 12:45. So that's an hour and a half before the actual trend signaled that it was going up. That doesn't mean you'd have to wait for that. If you are a conservative trader, you would. This, however, tells you that this is a high probability reversal point. If you take any entries off of that trade, then your risk would simply be to the bottom side of that zone in case price continues down. This reverses, then you're trading probabilities and risk. So that would take you up in the direction of the trend as it reverses off of this. The overall trade for the day is up, so trading in the direction of the overall trend gives you a higher probability for profit. If you trade on the direction of profits, and if you trade in the direction of probability, then you're going to be doing much better. How do you get everything on my chart? Then you'll have to purchase the separate software packages. To do that, just visit HawkeyeTraders.com and you'll get more information there about adding more of the Hawkeye software to your arsenal.
Well, it looks like the questions are dying down here.
Yep, I think it's slowed down here.
So thank you guys for joining us this evening, and hope that you were able to walk away with some good golden nuggets that you can take and use in your trading repertoires, so that if you haven't formed a trade plan yet, this can be a wonderful foundation for you, or you can augment your current trade plan with with seeing the unseen levels of supply and demand.
Cool, very much. What is the link for NinjaTrader for Thinkorswim? Yeah, I can show you that very, very quickly. Are you showing yours, Gabriel?
Oh yeah, I just moved it over to this slide here.
Yeah, just show them real quickly on Ninja how they add a different connection.
Oh, sure.
Just pull your control center over and show them how to add a different account connection.
Okay, so what you need to go into is go over here to the account connections, and then you hit add, and then it will give you this screen here. And then one of the options is TD Ameritrade. And you just select the TD Ameritrade, put in your account name, you know. And
Make sure you
then,
click on, wait, go back. Make sure you click on use TD Ameritrade servers. There you go.
Mm-hmm. And then you use the username and password that they provide you.
That's right.
And then you're good
That's
to go.
your standard Thinkorswim or TD Ameritrade login information. And you'll link directly to your data, your equity or ETF data account. Awesome.
All right. Well, thank you everybody for joining us.
Dr. Emil had one last question before we purchase. I don't see the question. It's buried underneath the ton of other questions. But if you could repeat it very quickly, we'll take that as our last question of the day, and we'll head out of here. So we'll wait for your